Hi there, I'm Ellie, and today I shall be discussing the LIBOR Scandal and the loss of Britain's AAA rating as a special guest video for Meta Trading. Before the mid-90s, telephone transactions were the primary source of all trading activity in the financial market. But with the development of technology, trading gradually moved over to the electronics means. LIBOR, which is the London interbank offered rate, is meant to be the point of reference for everything stemming from credit card interest rates and mortgages to complicated international financial transactions. And in theory, should reflect the average rate in which banks pay to lend to one another. Each day, the rate is set by the British Bankers Association, based on estimations gathered from 16 major international banks who are based in London. Barclays Bank is one of the major international banks who submit these estimations to the BBA, and in 2005, word started to spread internally between certain members of staff at Barclays. Thanks to trading moving into the electronic means, rates being submitted from Barclays were often set for their own requirements, manipulating the dollar LIBOR and the Euribor, which is the Eurozone's equivalent to LIBOR, to increase their profits and bonuses. Over the next few years, this secret spread from the Barclays circle, and to other rival members were introduced to the rate rigging, such as RBS and the Swiss bank UBS. When the financial crisis boomed, rate fixing became common practice between the banks involved. Submitting lower rates would redirect any concerns that they were struggling to borrow cash from other markets. This manipulation gave the impression of a strong ability to raise the funds and the appearance of a healthy credit rating. There were several attempts made to the BBA and the FSA asking for investigations to be made over potential rate rigging, but the allegations were dismissed, with mainly two reasons. There was either not enough evidence from the concerns made, and the other reason being that the BBA and FSA are only regulatory bodies and not investigators. Although they deny any responsibility of the awareness of the scandal, it seems that the banking system and the financially related bodies came out of it lightly scathed. Concerns have sparked throughout the general public on a global scale, and the scandal goes much higher than those who have been publicly exposed. Those who deny any responsibility are thought to have had a much deeper understanding of the goings-on, and it is of the belief that the benefits of the ignorance outweigh the truth of what was actually happening. So basically, one big happy financial family. I'm sure many of us will blame the financial crisis on the rigging of LIBOR, with Barclays in the centre of spotlight in the UK and in the US. So this brings me on to Britain's AAA loss. It's been 3 months since Moody's announced that they've downgraded Britain's credit rating from AAA to AA1. Whilst at the time this was regarded as big news, the question is, has there been any knock-on effects since the downgrading, or was it just a storm in the teacup? The reason behind Moody's downgrading mainly came down to their forecast that economic growth would be sluggish. This in turn presented the government with greater challenges in lowering the very large deficit. Now please note that obviously AA1 is a long way away from C rating that Greece now has. But theoretically speaking, a lower credit rating can result in higher payments when a government borrow money. And by the time the downgrade happened, sterling had already fallen considerably against the dollar. With the downgrade, some experts were warning that this thing could get worse, with the likelihood that being that the pound could even be even with the dollar by the end of the year. The thinking behind this being that higher interest rates would cause investors to sell their UK investments, driving the value of the pound down even further. However, despite some initial fluctuations, it would appear that the effect of Moody's downgrade has actually been very little, and there is more than one reason for this. Moody's did add that the UK's credit rating was still very strong, and that the outlook for the economy was looking stable. What's more, the downgrade hardly came as a surprise, with some suggesting that they were even just stating the obvious. If anything, the only real effect the downgrade had was that it gave the main political parties an opportunity to score some cheap points, both blaming each other for the downgrade itself, saying that it was the others' economic policies that had led to this. Although Barclays are at the forefront of the blame for the LIBOR scandal. We cannot forget the consequences Britain could have suffered had Barclays also asked the public to bail them out, alongside the rest of the scandalous banks. Due to an agreement made by Barclays brothers in exchange for part of the company, a Middle Eastern investment was taken to cover their losses, effectively being bailed out by the investment and not the UK taxpayer. 3 months down the line, and the reality is that Moody's downgrading has had very little, if any, effect on the UK's economy. Because of the LIBOR scandal and the financial crisis that hit us all several years ago, we can only hope that banks will prove that society can trust them once more again. And it will not end here though. There will be other major scandals reaping profits from the country's economies, and it is up to the regulators to enforce higher standards in recognising and preventing such wrongdoings, seeing it as their job. Well, thank you very much for listening and have a lovely day.